LA fires and their devastating impact. This is certainly not how many of us expected to start the year, but unfortunately, natural disasters happened. Not too long ago, there were two back-to-back hurricanes in the state of Florida. And often we think that the impact of those events is insulated to those particular areas, but unfortunately, that is not the case, especially when it comes to insurance. Because at the end of the day, insurance companies operate on a global manner. They're not just constrained to a single city, area, or state. And very often, when they experience a pretty large amount of losses, they have to make up for those losses somehow. And usually, in most cases, that comes in the form of higher premiums. So just because your investment may be located, say, somewhere in the Midwest, it doesn't necessarily preclude it from exposing itself to that risk of higher premium and potentially loss of coverage if it doesn't meet certain parameters. So how can you protect yourself? Well, one, start with selecting the right investment type. Usually older properties, ones with roofs that haven't been replaced in years, certain plumbing, electrical components, or in certain maybe crime areas, flood areas. Those are typically carry higher risk and therefore not only higher premiums but also higher probability of being dropped. But let's just say you've already bought the property, you already own it. So what do you do next? Number two is have multiple relationships with brokers. So when a renewal time comes, you have various options to consider to manage the premium increase and or potentially the risk of coverage drop. Number three is having adequate reserves. Of course, we don't know what the future holds. We don't know exactly or if how much the premium will increase, whether or not we're going to get dropped. But having adequate reserves help protects us, at least in the medium run, in case of unexpected loss. Oftentimes that means being almost self-insured, especially if you're absolutely not able to obtain insurance. Number four, working with non-admitted carriers, which are carriers not licensed by the state, which gives them the ability to have a little bit more flexibility in terms of not only providing coverage but also enforcing their own rules. And if you have multiple properties and are potentially looking for tax efficiencies, some investors also set up captive insurance companies. But in all cases, all five cases that I have shared, it really boils down to proper planning and carving out adequate reserves to at least minimize the risk of loss in those unfortunate circumstances. At least that's what I'm thinking about and considering when I evaluate potential investment opportunities. And I hope you found today's video helpful. If you did, please share the love, like, share, and subscribe, and I'll see you at the next one.